Hello everyone, welcome to the training and educational series video. Today I want to talk about two forms of participating in the equity markets. Now many of you are wondering like how and what approach is beneficial for me, or what approach I want to take in the markets. So in the last training and education series video, I provided a basic insight of how one can participate into the markets. Now I want to deep down in the strategy session. So many of you have are on the different life stage. Some of you may be starting your career, some of you may be having a family, are probably in your late 30s 40s. So everybody's life situation is different, and therefore everybody's approach to the equity markets or the financial markets need not be the same. So I wanted to ensure that you understand your risk taking capability, you understand what you want to put on stake, and then decide on what strategy or steps you want to take. So today I would like to discuss pros and cons of two most popular methods, that is investing and trading. So when I discuss about investing, the whole idea over here is to build wealth over the long term. So let me dive deep into this concept, and let me share my views and my pros and cons of each approach, and then looking at the entirety of the data, you will be in a better position to decide for yourself that which way you want to go, or like how much allocation you want to do in each of these methods. So let us jump right into it, and let us dive deep into each of these concepts, that is investing and trading. So let me be very clear in terms of goals. So the goal of investing and in trading is to actually make money and bring good returns. So the goal is the same, but the approach is very different. So in investing, I'll discuss the investing part first. So what happens in investing is, let's say you are a professional and you are already working in your daytime job, and you have a lot of spare capital to deploy, and let's say you do not need to touch that, or you do not need to tap into that saving for a long period of time, then you can consider investing. Now, in investing, you need to know two, important metrics. One is the amount of return in terms of percentage that you are going to get, and other is the risk amount that you are willing to take. Now, in investing, you can do investing in, passive, mutual funds or index funds, or you might, max out on your retirement plans, that is 401k and Roth IRA. Or you might have a savvy lifestyle and reading lifestyle, and you might have a fair and reasonable idea about the investing world, and you might want to take a little bit more risk and invest directly into the companies. Now, my approach is very simple. For the people who want to learn about it, and who are who can spend some 30 to 40 minutes a day reading about the companies, reading about the profit and loss statements, who has a fair idea about the balance sheets, who keep the track of quarterly results and quarterly earnings. If you are that kind of person, then probably investing is for you. Also, a few tips from me, that always start with small amounts, always dollar cost average, do not put, or you do not deploy the entire capital at once. These are the basics, strategies which immensely help you in reducing your risk exposure. Also, I would highly recommend that if you are starting the investing journey, then do not start by investing into small companies. Always go with blue chip companies, the big cap companies, mega cap companies, which actually run the United States of America. So if you ask me, I would say whatever sector you want to invest in, select the top 5 companies in that sector which are highly positioned to do well. So for example, I am an engineer by profession, and I have a reasonable idea about what the IT industry is doing and where it's going. But still, I would only, if I want to invest, then I would only invest into the big, magnificent seven companies that they call, that is Apple, Google, Microsoft, Amazon, big companies which have good balance sheet, which have good track record, which have a good quarterly earnings, which reasonably spends into R&D. So all those things really matter. Now, as far as the pros are concerned, the first pro of investing is it is less risky. So when I say it is less risky, if you follow all these rules, if you only dollar cost average, if you only invest into blue chip companies, if you keep that investment for a long period of time, then definitely you are highly positioned to make good money. So when I say investing is less risky, provided that you do all these things. So first point in investing is it is less risky. Second point that I wanted to discuss, which is a pro of investing, is in investing, you don't need to do a lot of hard work or research. I mean, that is very subjective term. It can be challenged, but what I'm saying is, once you did your research, once you form your opinion, then there is no lot of day-to-day hard work involved. So for example, let's say I did a research on Apple, Amazon, or Google, that these companies are very highly positioned to do well, and let's say I bought the stock and I dollar cost averaged my position, and then I just have to sit on my chair, just live my life for a lot of years, and I'll see good returns. So in the meantime, I am free. So whatever I want to do with my life, I can do with my life. So I don't need to be involved heavily into equity markets on a day-to-day basis. So that is point number two, that you get to live your life. You get to do your daytime job and not worry about markets on day-to-day basis. You don't have to be in touch of the markets. You don't have to keep a daily track of the markets. So that is the second advantage of investing. Now, let me come to the cons of investing. So normally people don't discuss this because they show the gloomy picture every time. So the cons of investing, I just have one, a big tectonic problem with investing is, it is especially for young professionals like me, or the people who are in their 30s or in 20s. So for those people, yes, the time is in their favor. They can contribute regularly for 2-3 decades, and definitely they'll be millionaire. But there is a very big caveat or catch in this, and that catch is, like, for investment, for doing investing, to actually see a sizable return, or to do this full time, you need to have a really good amount of capital. And in young age, where do you find you are not in the position to have a very big capital, because you are in the process of building wealth. So building wealth and gaining exponential returns on investing is very hard. So let me explain you, like, what do I mean over here. Right now, I am IT engineer. I'm doing a job in a company, and let's say in California, San Jose, and let's say I'm bringing 6 figures salary. Now, to bring that 6 figure salary from investing, I need to have at least $1 million invested into the markets, so that I can bring yearly 10%. So let me explain what I mean. Let us say if Nasdaq and S&P markets gives you 10% return almost every year, if you look back 30-40 years of the markets, for that 10% return, which is my yearly salary, I actually need to invest at least $1 million, so that the 10% of that $1 million is $100,000, which I bring yearly as of today. So if somebody wants to do this full time, the ticket size or the entry position is very high. So if you're thinking that, okay, I'm bringing from my job, if I want to bring from investing the same amount, that is going to be very tough until and unless you have $1 million or whatever in your investing account, so that the 10% return on that portfolio yields you the amount of salary that you're making through your daytime job. So that is one of the big caveats, I would say, of investing, that the patience level that is needed for investing is very, very high. And with all due respect, I want to say that day by day, because of advent of technology, and I'm sorry to say this, but 99% of people doesn't have that psychological patience or firepower to actually wait to reap the fruits of investing. So it is sad reality. But if you look into your hearts and say, okay, am I patient enough to actually stay in the markets for 2 to 3 decades and get these returns, it's a very questionable thing. So you can decide for yourself. But this is the caveat, that if you want to make your daytime job salary through investing, then you at least need 1 million in your investing account, so that 10% of that would be your current daytime job returns. So that's my only con about investing. Now what you can do is, you can learn other approaches as well, and you can build wealth gradually. So what do I mean over here? I read a very, very good quote which explains this very, very easily. It says, if you want to be rich, then you can take excessive amounts of risk with small amount of capital. And then when you become rich, you can take a very small amount of risk with excessive amounts of capital. That's how you stay rich. So this is a very powerful quote and a very insightful statement. Like, when you are young, you take excessive amount of risk with small amounts of money to become rich. And then when you're rich, you take a very small amount of risk with excessive amounts of capital. So that brings me to the topic of trading. So for the people who are really, really passionate about getting financially independent and getting to that level of escape velocity, where you can actually say that, okay, now I can quit my daytime job, and now I have enough liquid assets under investment, so that it can fund my future lifestyle very easily. For that, that brings me to trading. Trading is basically same thing, buying and selling, same as investing, but the time horizon is very, very short. Now there are a lot of types of trading. People do momentum trading, people do swing trading, people do position trading, and then the most risky is people do day trading. Now if you talk about risk, then definitely, with all due respect and full disclaimer, trading is risky. But at the same time, if you see the risk reward ratio, trading is highly risky and it is highly rewarding. And investing is less risky, but exactly directly proportional, less rewarding. So if you have that skill, if you have that passion, if you have that knowledge, and if you have that determination to actually become a really good trader, then there is a lot of scope to make money while you are in your young age. So by all means, the odds are against us, but it is true for all the professions. If you ask me, like, how many people become successful doctors or successful engineers, the percentage of top 2% is always going to be very, very low. And that is exactly true for trading as well. So in trading, there are a lot of people which enter this industry, but because of lack of guidance and lack of many things that I'm going to discuss further, they do not tend to succeed. So my whole goal of this channel is to empower people with knowledge, so that the odds of them getting success exponentially increases. So that is my selfless and noble goal through this channel. So basically, this is the gist of trading. Now, now let us discuss what are the pros and cons of trading. Now, in the pros, I told you again that it is highly rewarding. So you can make insane amounts of money through trading if you get it right. And if you get it right is a very important phrase. So discussing the cons of trading, the cons of trading means you are taking enormous amounts of risk. There is a lot of odds which are stacked against you. You are competing with the highly knowledgeable intellectual people from great institutions. You are directly competing with Wall Street. On the other side, the pros of trading is you work from home, you answer to nobody. That is the very big perk. And you take accountability, and your success is directly proportional to your efforts. You take the full fruit of your efforts. So what do I mean by this? When I say that when you perform well, you actually take 100% fruit of that effort, means let's say I work really nice in this year, then the person who is benefiting is right now the company that I work for. But on the contrary, if I be a really good trader, then the person who is going to get benefited is me myself. Why? Because I do trading and the fruits are directly transferred to me. So these are very subtle, differences, and these are very subtle points that everybody needs to know before choosing what approach should they take. Now, I would always suggest that learn both. Knowledge never hurts. I would suggest, even if you are, doing investing, always have a good knowledge of charting, always have good knowledge of technical analysis. Even if you are concentrating on fundamentals and macro, it never hurts to have good knowledge of charting. So that's my take on, both approaches. And now you can decide for yourself which approach suits you in your particular life situation, and how much time are you willing to dedicate for the markets. And if you are someone who can dedicate very less time, then probably investing is for you. But if you are young and if you want to learn the skills, and if you are willing to give what it takes, then trading is for you. So now I will let you decide what you want to do, but I just wanted to give you a gist of what to expect and how things are. So that's all for today's video, and that's my take on both approaches. And from the next video in this learning series, I will dive deep into my trading tools, techniques, technical analysis, charting. So stay tuned, because you are going to get a lot of quality content regarding trading and regarding the setups that I use, the software that I use, everything. So with that, my last humble emotional, I would say, thought is just keep learning, keep growing, and keep trading. At the end, I would like to thank you for watching this video. I hope I have cleared a lot of questions and a lot of concerns, and I hope you are enjoying the value in this content. And if you do, then please like, share, and subscribe, so that everybody knows this and anybody can benefit from it. So thanks so much, and see you guys in the next video.